Welcome back to Power Lunch. President Trump is reportedly expected to sign an executive order in the coming days that would help make private market investments more available to U.S. retirement plans. Could pave the way for big managers of these private assets to access the vast sums of retirement savings held by workers who don't have a traditional pension. What it could mean for you and your money, let's ask no one better than CNBC senior personal finance correspondent Sharon Epperson. Sharon, we've talked about crypto and retirement plans, and I guess you could do some of this now, but a lot of people aren't doing it because they're concerned about the fiduciary and all the rest of it. If this now becomes a bigger, safer thing to do, just walk us through how it might work, what the options to people might look like.
Well, what we're talking about is the president perhaps giving guidance to the Department of Labor and the Securities and Exchange Commission about how this could work by putting private market investments into target date funds, into balance funds within a 401k plan. And so this is something that Trump has been signaling he's very interested in since 2020. He sent an information letter out, the Department of Labor under him, saying that this could be an additive to 401k plans. The way that it would work is when you look at the amount of assets that are available in the 401k industry, some $12 trillion in assets. Wow. There is a lot of potential for those who have private market investments to want to have them in 401k plans. The reality is the average account balance for a Fidelity 401k holder at the end of the first quarter was $127,000. And we're talking about just over $10,000 for a Gen Zer, if you look at different generations, and almost $250,000 for a baby boomer. So the way that would work is for investors who have more sizable assets.
That's what I was going to ask. So not everybody could access.
Everyone will be able to access it.
Not just accredited?
But the people who are not just accredited investors, but the people who it probably would be best for, based on the financial advisors that I've spoken to and you have as well, would probably be those who have significant assets already.
In our interview yesterday about energy and energy infrastructure, Larry Fink of BlackRock kind of alluded to this. He said, well, soon... and I'm paraphrasing, I should have the direct quote, so I don't want to screw it up, but it was something like, well, soon we're going to have access to private capital in your 401k, something like that. BlackRock and firms like that would benefit big time if this were to happen.
They would benefit big time, and so that's why firms like BlackRock, Apollo is also very interested in this. Even there are some retirement plan providers who are saying, yeah, this makes sense to do, like Empower. They want to make sure that that's available to their 401k holders to, as they would say, level the playing field. But there's a lot of controversy over, if people don't understand today how a target date fund works right as it stands now, or maybe not even how an S&P 500 fund works. They're just defaulting into whatever the default is for their plan. Adding something that is an alternative investment that is less liquid, less transparent, that has high fees, not sure if this is something that is truly for everyone.
Right. I mean, I worry a lot that it's basically great for the industry. I mean, this huge, huge win for private equity, private credit, and all the rest of it. I'm not sure there's enough of a track record to say this needs to be part of anyone's retirement portfolio. Right. Also, because in a way, this asset class is still so young. It's like when we say America is still young. Relative to the stock market, this is still very young, and it hasn't been tested through many, many, many decades of returns in order to know kind of what position exactly it should occupy and why.
Well, the concern that financial advisors I've spoken to say is that people are always looking for a quick fix. And so I haven't saved enough. Maybe this will help me meet my retirement goals, not understanding all the challenges. The other concern is, are they getting independent financial advice, not from a plan provider, about how this fits into their whole financial life?
Do you guys